Right, we've got less than 10 minutes till market opens. That 1 day bearish fair value gap from yesterday did carry out. We took out the low in the third candle. So now we'll just stick with the 4 hour and 1 hour. On the 4 hour, I've already marked this bullish fair value gap right here. Um, we have that 4 hour intermediate high right here. And again, in simple terms, an intermediate high is just the highest high in a bearish fair value gap, right? So think about if this bearish fair value gap wasn't here, this small candle body and tall wick would already be considered, somewhat of a decent liquidity level where if price takes it out, if price sweeps it, we could continue in the dominant trend direction, which in this case is bearish. But the fact that it's within a bearish fair value gap, that makes that even more influential. So that's the intermediate in that 4 hour. And then we have another intermediate here in this 4 hour, right? Candle one, candle two, candle three, the highest high within that right here, resting below previous week low. So this is also a very key liquidity level. This candle right here in this fair value gap sequence would be considered a order block. Candle body is within the wicks of the adjacent candles and it's superseding the wicks of the adjacent as well. I mean, that's textbook order block and it's on the 4 hour. So I see a lot of rejection here, but it depends if we target this 4 hour bullish fair value gap first, if we target this first. I could tell that we're gonna have to adapt more when market opens today. But let's draw down to the 1 hour. I know for a fact, because this has been the case for the entire week, that on the buy side, it's only that 4 hour bullish fair value gap that we have to work with. There's nothing else on the 1 hour. There's absolutely nothing else on the 1 hour. I marked this as a key liquidity level, which I think is valid, but this is the only gap. This is the only gap. I mean, I guess we do have this intermediate right here from this bullish fair value gap, but the reason why I didn't mark it is because 250 points is decent. I was going to say it's only 250 points from this low right here. So if price targets this point, why not just take out this low? Especially since this low in this bullish sequence, price is not going to generate enough liquidity to continue bullish, right? If we're bearish way down here, we're most likely going to take out this low. So I won't even mark that. Now, if we were to check beyond that, beyond this low right here, then we have this liquidity level right here, and then I guess this gap way down here, but that is 2,000. That is 1,600 points away. So we're not even going to consider that, right? Let's stick with the 1 hour and 4 hour we have here. See the 4 hour. If we go down to the 1 hour, you don't see anything else except these 4 hour zones, right? 4 hour order block. We have a 4 hour intermediate high. There's nothing unique that the 1 hour is showing us, basically. And even buy side, same deal, right? So now we're gonna draw down to the 30-minute, and 30-minute, it's not a time frame you want to rely heavily on, right? Because it's not high enough for the high time frames, it's not low enough for the low time frames. Kind of like a middle time frame I would consider is 15-minute. Maybe you can throw 30-minute in there as well, but more people trade 15-minute, 5-minute, 1 hour than they do 30-minute. 30-minute though, from my experience, I've noticed works well if you use it in tandem with the 15-minute time frame. So something you see on the 30-minute, there's a decent chance you'll see it on the 15-minute as well. That's just what I find, right? So if I see a 30-minute bearish fair value gap on the 15-minute, I will see a 15-minute bearish intermediate high within that fair value gap. So it naturally, if you see it on one of them, you'll see it on the other. But I find that 15 and 30 work pretty well, as opposed to like 30 and 1 hour, right? So we're gonna check 30-minute. on the 30-minute, we have this intermediate high right here. Okay. So this is a good example because you haven't seen an example of an intermediate high where there's not another wick entering that fair value gap, right? So we have this bearish fair value gap right here. Candle 1, candle 2, candle 3. We entered it here. Price came up. We sweeped that high, right? So this was an intermediate. And look how price rejected to that. We ended up taking out these lows. Price on this 8 a.m. 30-minute candle ended up sweeping this 5:30 a.m. 30-minute candle, which was considered the intermediate high in this bearish fair value gap, and then we continued down. So that just shows the validity of a intermediate, right? So I could mark it again, right? Because we could take this out one more time. We could. So I'll mark it. And then on the 15-minute, what's nice, look, my point is being proven right now. Let me show you. On the 15-minute, you see a clear 15-minute bearish fair value gap right here. Okay? Very clear bearish fair value gap on the 15-minute. This gap right here, right? And the stop loss is up here. On the 30-minute, you have an intermediate right here. So think about how much liquidity. I'm not saying it's, a bunch, but it's a decent bit that if price were to retrace back up here, take out this 30-minute intermediate high, which is within this large 30-minute bearish fair value gap, take out that high while also entering the 15-minute bearish, that might be enough liquidity for us to, fully take out these lows, right? Opposite of that might be like if price wants to continue pushing, it could take out London highs, which is also coinciding with this intermediate high on the 4-hour, I believe. We could do that and then continue our downtrend. But the point I'm making is that there might just be enough liquidity for, like in this zone right here, for price to not even want to reach London highs. That's the point. And that's why it's important for us to find these key levels, even on the 30-minute and 15-minute. Because a lot of times, sure, you want to know the price direction and the daily bias by looking at the high time frames like 1 hour and 4 hour, but the exact trade might carry out on the 15-minute and 30-minute. So that's just one thing to note, and it's good that we kind of caught that. I will mark this 30-minute intermediate high right here, and we should be good. I don't see anything else on the 30-minute and 15-minute. Nope. Yeah, there's a fair value gap here on the 15-minute, but it's already marked. It's already marked by this intermediate we found on the 4-hour, right? There's nothing unique. That's what we're looking for right now. The only thing unique is what we're doing to price right now, right? This 15-minute bearish fair value gap right here. If it decides to carry out, it very well could. That does not mean we're taking shorts at all. Just because you see a 15-minute bearish fair value gap does not mean you take a short, right? Right now, we're still trying to understand where price is headed. Market just opened. Okay, I needed to hit a high time frame key level to then understand, okay, where is price pulling to next? Which side of the market, buy side or sell side, is acting as a magnet for price? And looking at the 15-minute alone is not going to tell us that information at all, right? We need to look at 1 hour and 4 hour for that. So I do want to see us hit this key level right here. And like I just said, you want to look at 1 hour and 4 hour to determine the daily bias and where if price is pulling buy side or sell side. That's true. 1 hour and 4 hour, it's a fact. So this would be considered, a key level that I kind of want to see price react at, and then I'll decide what I want to do. And this would also be considered a key level, this intermediate, this 4-hour order block. But I would also consider this 30-minute and 15-minute. And even though I said 1 hour and 4 hour, the fact that there's two time frames here makes it just as important as if it was one high time frame. That's from my experience. That's something I've noticed from the thousands of hours I've spent on the chart. That if I see something on the 30-minute and 15-minute and it looks like a key inflection point where taking out one level would help price enter another, and that would generate double the liquidity and then pull price in the dominant direction. If I see that and I feel that, and it's on the 15-minute and 30-minute, which aren't low time frames, keep that in mind. It's not low, it's just lower relative to the 1 hour and 4 hour. So if I see us react here, I'd be prepared to enter. But if I just see a 15-minute resistance here, why would I enter? That's a big mistake a lot of people make. They'll see a 15-minute bearish fair value gap, but it's like, dude, look at, zoom out. Zoom out for a second. Like, quite literally, zoom out. Go to a high time frame. Understand market structure. Understand where price might want to go. Don't enter a trade the second market opens. And a lot of that is just fueled by fear of missing out, right? And greed. So don't have that. Okay, just be patient. Until it enters those zones, I'm going to pause and then we'll resume once I see it enter a key level. I did forget, we need to, it's a good idea, let's compare it to ES. Let's look for any potential SMT divergences. And that'll, I guess, give us more clarity on where the market could be heading. In simple terms, SMT divergences, in a bearish market, if one of the assets is, like if NQ has taken out the prior low, like if NQ made a lower low while ES made a higher low, that could tell us that we're long-term or temporarily bullish. And then in a bullish context, if NQ made a higher high or ES made a lower high or vice versa, that could mean we're temporarily or long-term bearish, right? And when I say temporarily, it means that price could temporarily pull back, enter a key level, and then continue in the dominant trend direction. And long-term could just mean like market structure has shifted. So now let's look at 4 hour for both. Both have taken out this liquidity level that I marked. We actually did that in pre-market, so there might not even be a point in me still having it here, but both have entered that 4 hour bearish fair value gap right here. Let's check on the 1 hour. Okay. Neither have taken out this 11 p.m. low. Let's check on the 15-minute. Yeah. No, it's still in sync. So I'm just going to have it on another screen, and if I see a change there, I'll pull it up on this one and we'll compare it as we go. But for now, both of the pairs are in sync. There's no need for price to find an equilibrium. It might happen at some point in the market. I like to see it at least. I enjoy seeing an SMT divergence. It's just more confirmation, right? Because for me, confirmations are anything that generate liquidity. And then I keep zooming out to a high time frame and like microscoping into a low time frame, and I see like first of all, what's our daily bias? If it's bullish, how many factors do I have that are respecting bullish? And that alone will kind of tell me like, okay, we're at a certain point where I can look for where to enter. And then in terms of confirmation, that's really what tells me like, okay, now is exactly when I enter. So my confirmation strategy, you'll see it as I place the trade, if I place one. That is just, I'll look for a low time frame fair value gap and wait for price to inverse it with a a decent volume down close candle. Or up close, right? Like I just want the close to close higher than the second candle in the fair value gap, which would prove to us that, okay, we have successfully inversed it. We've disrespected that fair value gap, which is going in the opposite direction of where we believe price is heading. And that just is confirmation that we're saying, hey, screw this small time frame bearish fair value gap. Like the trade has begun, right? So we're still gonna have to wait. We're not at a key level yet. All right, so we're 30 minutes into the market right now, and finally we've entered a key level. ES has also taken out their high, their 8:15 a.m. high. So Maybe we don't look for an SMT, but what I am seeing right now is we've swept our 30-minute intermediate high, our 15-minute bearish fair value gap, and now could be a good time to take shorts. Yeah, now could be a decent time to take shorts. But I'd wait for confirmation, and if I don't see us inverse a bullish fair value gap, meaning if I don't see us break the second candle in a bullish fair value gap on either the 1, 2, 3 minute, maybe 5 minute time frame, then I don't enter, right? Because then I haven't received my confirmation, and price could very easily keep pushing up in this 4-hour order block. So the stop loss for this 15-minute bearish fair value gap is we're about to hit it. And what I've noticed, which a lot of people get wrong, is that look at this 15-minute candle. There's still 14 minutes and 25 seconds left on it. If at the end of it, the candle body, the body closes within the stop loss, meaning it closes within 29,501, it closes within where this horizontal dotted line is marked at the end of the 15 minutes, then that means we've respected it. But ideally, we'd want it to be within the fair value gap. So you know what? I'm wrong. It shouldn't be within the stop loss. It should be within the actual gap. So if at the end of the 15 minutes, the candle body is within 29,457, then we're within the gap and the body is within the wick of the prior candle, which shows that we had a really discounted price action up here. Like price really pulled back, but candle body finished within the fair value gap and the prior candle wick, respecting this key level. So I'd have to wait for it. It's very possible for us to just keep pushing and taking out. Like if we take out London highs, which is this intermediate high, then this key level is no longer what's influencing price. What would be influencing price at that point is this 4-hour intermediate high. So we're just gonna have to wait for that. I still got ES popped up. ES is basically exactly where NQ is right now. So we're just gonna wait and I'll see where price moves in the next 13 minutes. Okay, so I'm liking this now. What I think has a decent chance of happening is if you look at ES, ES has taken out London high, right? And taking out London high means ES has also entered that 4-hour intermediate high, right? We have that 4-hour bearish fair value gap. We've taken out that high. If NQ does not take out that high, which it could literally any second, that could be a good bearish SMT divergence. And then hopefully candle body for NQ would close within this fair value gap. And then that would be confirmation for us to take shorts, but it looks like we're taking it out right now. Yeah. All right, we've just taken it out. What we could do at this point is I'm not taking long entries. It just, nothing about this is telling us that we should be taking longs. Absolutely nothing about this. We haven't entered a high time frame bullish key level. We just haven't done it. Okay, but now we have, right, okay, so let's slow down. Now we have NQ and ES both entering this key level, right? We've just both swept intermediate highs. Maybe we might get like a low time frame SMT divergence, but I'm not really seeing anything that's giving me confirmation I should take shorts, even though we're at this key level. Yeah, no, nothing. Nothing. We're gonna have to wait it out. I'll pause and be right back. I think a possibility that it's more like pattern recognition than anything technical is a double bottom. This is a double bottom, right? Double bottom doesn't require both of the lows to be exactly at the same price point, but if ES hasn't even taken out this low, if they both look exactly like this, that could be a very clear double bottom. And it could mean that price is wanting to take out previous week low way up here, right? Which is this level, or previous day high, which is over here. So that's possible. We just had a 5-minute entry. But what I kind of want to see, so if we were to flip the narrative right now and be bullish, what I'd want to see for me to enter a trade is target this breaker block zone. So if we look here, the key level that we broke with this high volume bullish candle on the 5-minute is this level right here, right? This was an intermediate. We broke that. So I'm going to wrap a box around this 5-minute. And that is our breaker block. So if price returns into this zone and I see a confirmation, like if I see a 30-second bearish fair value gap get inversed or a 1-minute bearish fair value gap get inversed, then I'm comfortable to take longs. Until then, not really. And then at that point also we'd have entered this 15-minute bullish. So that's kind of what I'm looking for if I want to take longs. But we are see, on the 4-hour, this is not an order block candle. The prior candle has a wick that's superseding this one. This, this 2 p.m. 4-hour candle. It has a wick that's superseding on ES. So it's only a 4-hour order block on NQ. Now that's so, it's the tricky thing. It's like, why would we enter along at a breaker block assuming that this double bottom is carrying out when we've just entered a 4-hour bearish order block? You see what I'm saying? Like, that doesn't make much sense, right? And again, I understand that this gap right here can be filled entirely. Like, we could just clear all this liquidity by being bullish, but am I doing all of that subject to the fact that this is a double bottom that's carrying out? I haven't even seen an S&P divergence here. I guess that's what part of it makes it a stronger double bottom, but that's it. Like, that's not really my strategy. I don't trade patterns. So I'm not sure if I would take a long if we enter this 4-hour bearish order block. I'd be looking for shorts, if anything. Even if price retraces back down here, I'm not taking a long, right? I'm not taking a long. I guess if we enter the 4-hour order block, the breaker block would be this zone right here. So then it's a question of, do I take a long over here? Yeah, I don't love that. I don't love that at all. So we're just gonna leave it at that for now. It's tricky. We're just gonna have to wait it out. I'll pause and then resume. Okay, here are a few important things, right? That I didn't see at first, but I think that's definitely what's driving price right now. And it's important to not make what I'm seeing part of my decision making in taking a trade, but we just want to recognize it, right? So I think a lot of the price action on ES is what's driving price right now. For example, we have equal highs up here, whereas on NQ, we had taken out that high, but on ES, we hadn't. It's perfectly equal. Equal highs are an incredible magnet for price. It will either want to take it out or make a third high. In either case, it's going to pull price up. Not only that, like, even zooming to look at the 1-hour time frame, we have a bunch of sell side liquidity here. Just a bunch of liquidity that tried to continue pushing up at that same level 5 times, but we weren't able to. So now we want to take them all out, grab liquidity on the buy side, on the sell side, and continue our downtrend from there, or just grab that and at the same time take out these equal highs as well, especially since the equal highs are at previous day high. We dropped a lot yesterday. Taking out previous day high is not a big deal. That's very possible. It happens all the time, but it just looks drastic because of how much lower we are in relation to previous day high, especially at market open. But the fact that we tanked, like, I don't even know, we tanked at least 1,000 points yesterday. No, not 1,000. 500 points. Right? No, that was the high from yesterday. Yeah. Not as much, but I guess on ES it's less drastic. Of course, like on ES, a 300-point move, that's a lot. That is a lot, right? That in relation to NQ is a 1,200-point move, right? NQ is has four times more liquidity than ES. But in either case, I think that price is just, we're bullish today. I think that's the bias. I think, yes, we created a double bottom here on ES. Yes, we want to take out this sell side liquidity. And yes, we want to take out those equal highs. Now it's a question of where do we enter? And if we're trading on NQ, then the point at which we'd want to enter is going to be a certain breaker block, right? So we've marked this one, but we just took out this high over here. So it might be smart for me to mark this as our breaker block. And now what do we want to do? So yeah, again, this 4-hour bearish order block, I think we're just going to sweep all of this liquidity right here. I don't think we're respecting it. I just don't think so, right? So in that case, we're looking for an entry. I think this candle slamming through this bearish fair value gap right here. We had a bearish fair value gap, and then we had this candle invert that entire thing, high volume candle. I think it's not crazy to say at that point it's a good time for longs, especially after testing this bullish fair value gap right there. That was a good time where I might want to go to the 30-second. And just see what's happening on the 30-second. Honestly, if we invert this candle, I'm okay with taking shorts because we're at that order block, but it might be a day where we don't want to take a trade. We're gonna have to wait it out. We're gonna have to wait for this candle right here to finish, and the second it does, I'll resume and see where we want to take it. But yeah. Okay, so no, you know what? Here's what's happening. We are testing this 2-minute intermediate. We're respecting it. Okay, and right now 30 seconds is about to end. If the 30-second inverts this 30-second bearish fair value gap, you can't see it on the screen right now, but right here there's a 30-second bearish fair value gap. If we have a 30-second candle body, like a bullish candle that inverts that bearish fair value gap, I'm comfortable with taking longs. The reason why? We just had a 2-minute intermediate low get swept, right? And we kind of already tested this breaker block right here. When we broke that candle, we inversed it right here. We inversed a 1-minute bearish fair value gap with this bullish candle right here. So I don't think it's crazy to take longs there. I'd have to see a clear displacement candle on the buy side though. So I'm just waiting for the 30-second to finish. We just had a 30-second finish though. We're working on another one. We still haven't taken out this high right here. I'm just looking for a candle body close on the 30-second at this high. And when we see that, we'll know to take our trade. But not seeing any of that, I'm gonna wait it out and then resume once it happens, if it does. Okay, so we just entered that breaker block territory. I'm looking for a 30-second inverse maybe. We do have a 30-second bearish fair value gap. I'm looking for us to invert it. right around now. If we inverted, I'm comfortable taking longs. And the body hasn't closed yet. Just closed.
Order filled.
Taking my longs. And what are we targeting? Let's see. So we just target a 500, take profit, and because from here to here, that's 70 points. 70 times 2 is 140. 500 divided by 140. Yeah, I mean, it's about 2, but I would say, taking TP somewhere right here could be a good spot. Yeah, especially on the 15-minute, you can clearly see that this is a continuation signal right here. We have candle 1, candle 2, candle 3. Although it's a fair value gap candle, when you see a doji like that, or you can call it like somewhat of a spinning top, it's not low, it's not small enough, but honestly I would consider it a spinning top / a doji, a bullish one. That's a really good signal that price wants to continue bullish. So we'll just have to wait for price to, I don't want it to take out that low, but it could. Very well could. Somewhat of a flag pattern, I guess, right? Somewhat of a flag pattern. Just like a standard continuation sequence, I think. I mean, we're getting stopped out any second, so let's see. That's the problem, man. I think you'll see a confirmation, but then when you zoom out to a high time frame, you'll see a 15-minute bullish. That's the problem. Like, just you'll continuously see a high time frame make a fair value gap or some kind of gap that price might want to fill. You'll just always see
order filled.
Right, so order filled. Stopped out. But look, we got stopped out just as we entered that 15-minute bullish. So, man, let's see. I'll pause and I'll resume for a minute and I'll see if there's any takeaway or if price did go anywhere. Until then, no. All right, here's the takeaway from today's session. I was too focused on finding some kind of SMT divergence that I forgot to, keep in mind that what trumps that are these high time frame levels, like a 4-hour order block. And we entered one. We very clearly entered one. If you look on the 4-hour, or that still has 3 hours. If you look on the 1 hour, there's only 18 minutes left on this candle. Sure, in those 18 minutes, we can come and make this a high volume candle, fill it from the top, but we're within this intermediate key level, the London highs right now, and I think there's a decent chance that we stay within that key level even once the candle closes, which would just tell us that we did respect this 4-hour bearish order block. We did respect it. And I was too focused on maybe on ES seeing like, oh, ES did not take out this high. But while NQ did, and NQ did as it entered the 4-hour order block. And although that would make it even more likely, I don't need that, right? I don't need that. I think part of my mind tried to convince myself, like, that this was a very clear double bottom, that price wants to grab all of the liquidity on ES and NQ up here and target previous day high, but it's just not the case. It's not the case, and there's no way I could have predicted that, but I think it's important for me to realize that an order block has a lot of influence. And that's something we'll carry forward from Monday and next week's trading week, that I don't have to always have an SMT divergence at the point of which I want to enter a trade, right? I don't have to. That's it. It's today's trading day.